By the way, the shadow banking system. It's called the shadow banking system because it handles mind-boggling amounts of money, and it's unregulated. This was created in large part by Phil Gramm in 1999. The Clinton administration went along with it. Many Democrats went along with it. This was during the era of soft money, and the banks were throwing soft money around like crazy. With his Commodities Futures Modernization Act, said all commodities don't have to be traded on regulated exchanges, which takes us back to the Dust Bowl, by the way, in wheat. But in any case, you don't have to trade commodities on regulated exchanges, and a commodity doesn't actually have to be a real physical thing. Used to be you wanted to trade a commodity, it had to be actual stuff: silver, gold, pork bellies, oil, wheat. So, when Phil Gramm, doing the bidding of his wife Wendy, who was on the board of directors of Enron, doing the bidding of Ken Lay, who wanted to be able to trade as if he was a bank in energy futures, when Phil Gramm passed or wrote the Commodity Futures Modernization Act, which passed Congress in 99 or 2000, one or the other, when he did that, the whole plan was to say, yeah, okay, banks can create commodities. And they did. They said, okay, let's take $1 billion worth of mortgages, and we'll place $100 billion worth of bets on whether or not they're going to go bankrupt, some for, some against. And then we'll take that $100 billion worth of debts, we'll call those first-generation swaps, credit default swaps. Let's take that $100 billion worth of debts, and on each billion of those, we'll create $100 billion worth of bets. So now we're at, what? $10 trillion, if I'm doing my math right, worth of second-order bets. And then we'll place bets on those bets. And these are called derivatives because they all derive from the underlying value of the mortgage. And we'll buy and sell these in the marketplace. These will be commodities. Instead of buying wheat or oil, you can buy bets on mortgages. And we thought that went away after the great burst of that bubble in 2006, 2007, leading to the stock market crash in 2008. No. Not only have they not gone away, they're back. $23 trillion. Now, keep in mind, the GDP of the entire United States is $15 trillion. That's all the economic activity in the United States, $15 trillion a year. Our banks are sitting on $23 trillion worth of these things. The GDP of the entire planet is $65 trillion, and worldwide, the planet is sitting on $67 trillion worth of these things. Unregulated. This is an Ayn Rand paradise. This is the libertarian world. They're fixing to crash us again.